Hello friends, this is Raj Sastry from Raja Option Trading. Today is June 18, 2022. Hope you're all doing well. In today's segment, we'll take a look at top stocks with a heavy short ratio. As you know, when there is a very high short ratio and stock is sold off and it has got good fundamentals, then there is a good chance the stock can go higher and squeeze those short sellers. That's why short squeeze game is very popular, especially in the speculative investors. So with that, let's jump in and get started. So we got a good company here, Livent. It's a leader in the lithium technologies, and as we all know, we got a lot of electric vehicles. It's an emerging trend, so that's why we need a lot of lithium, and this company is a leader in the lithium technology. So with that, let's jump in and get started. Look, in today's segment, we'll do a quick market update and look at the top stock picks here. Some of these are my favorite stock picks here. These are good companies with a very high short ratio, and then we'll look at the list here with the stocks with a very high short ratio and see which ones we can pick. And finally, we'll conclude with few top picks that we can buy and participate in the short squeeze game and go from there. Alright, now let's jump in here and look at the market update. Look, we got a one-day market here on Friday. Market is indecisive. It does not know where to go. Dow Jones down, Nasdaq slightly higher, and we got S&P 500 slightly higher. But look at the close on Friday. Close is weak. That tells you there may be pain ahead, so we'll see how it goes. And stock market had a very bad week, and it might get worse before it's get better, and there is a 40% chance of economy being in the recession next year, according to Bank of America. We got to look at these news here. Don't need to worry too much. The moment there is a lot of bad news, that tells you there's a very good chance market might have bottomed, but buy some great stocks as it comes down. It's in a bargain basement price, and when it starts going higher, it will go higher quickly. So with that, look, Fed is a little bit slow in taming the inflation. That's why there is a big crisis now, and now Fed is trying to increase the rates aggressively, and we might have a hard landing. So that's why we got to be a little bit careful here. Alright, now let's jump in here and look at the fear and greed index. Look, from a fear and greed index perspective, we are in extreme fear right now. So a month ago, we were at even extreme fear. We were at score 9. Now we are at score 14. So I can see us going back to score 9, and then we might improve and go back to 25. So market is oscillating nicely between fear and extreme fear. It's a trader's market, as many of you know. Alright, now let's look at the market here. Look, we got a 3-month market, and in 3 months Dow Jones Industrial Average came down nicely, and same story with S&P 500 down nicely, and all these major indices are down in 3 months, and all the bulls, they have not made much money in this market here. But if you're a long-term investor, don't worry, market will go higher. You can buy some great stocks and go from there. Gold is in a sideways market, as you can see here. Nice trading range here, but as gold comes down, you could buy some gold. It's a good play to hedge the market. Look, crude oil, after going high, it's coming down here, and it's a good one. So look, it might have a good support level here. If it breaks down below here, it will have next support level around 95. So we got to be careful. I'm not too sure if crude oil is signaling the war might be coming to an end. That could be the case, but we don't know yet. But either way, look, it's coming down nicely here. Look for a support level around 95, or even up here. You could start buying slowly and buy your favorite energy stocks slowly as it comes down here. And look, bond market is also in a downtrend, as you can see here, with the central bank selling the bonds and tapering down. This can even go further down here. Interest rates are going higher, indicated by 10-year. So you got to be careful here. All these high debt companies, they will have tough time as this interest rates goes higher, and mortgage rates might also go higher. It's already climbing up, which will be causing some issue or trouble in the housing market. All right, now let's look at a bigger market here. Look from a bigger market perspective. We got a 3-year chart on the top here, and we got the 5-year chart. From a three-year chart perspective, look, we are right here. It's a 3-year Dow Jones Industrial Average here, as you can see here. All right, let's get rid of this thing. So we got 3-year market here. In a 3-year time frame here, it's a weekly chart. Look, we are coming down big time. As you can see here, nice downtick here, and there is a good support level, pre-COVID support level. We are just bouncing off of pre-COVID support level in Dow Jones Industrial Average. But if you come below this level here, next stop will be around say 2600 or so. That's why you got to be careful. We're in a very tricky situation right now. We just broke down below the pre-COVID support level. It might come further down and go into this 2600 support level. And we got S&P 500 here. It's also coming down nicely. Next stop is pre-COVID support level right here. So that's why you got to be careful here. 3500 could be the next stop in S&P 500. And Nasdaq is a little more stronger. Look, pre-COVID support level is right here around 10,000 here. We might bounce off of this level here, so that's why you got to be careful. Market is aggressively coming down, as you can see here. And then you got Russell here. Russell is squarely below the pre-COVID support level here. Russell is typically a leading indicator. This might be indicating even the broader market, including S&P 500 and Nasdaq, might go below the pre-COVID support level. That's why you have to be careful. Market might get a little more worse before it gets better. And then we got your 5-year chart here, and look, we are coming down, crashing here, and support level is right here. So you got to be a little bit careful here. It might breach the pre-COVID support level here. And one more thing to notice by looking at this chart here, look at the intensity of the sell-off back in COVID days, and then it came up nicely in a quick V fashion. It's a very steep drop, very steep acceleration, and right now we are in a not so steep drop here. It's a little bit slanted, as you can see, a nice angle here. That's why as it drops here, don't expect a steep uptick here like we have done in the COVID days. It might be a little more slanted uptick, especially because we got Feds trying to tame the inflation, and we got Russia-Ukraine war going on and multiple issues in the supply chain. That's why don't expect a steep uptick like we have done in the COVID-19 days. It will be a little more gradual uptick, and it might improve sometimes next year as Feds becomes more aggressive, increasing the rates. That's why it might get a little more worse before it gets better. So, buy some quality stocks here, and if you're an option trader, be careful with the buying call option. If the market comes down like this, your call option will become worthless here. That's why you got to be careful. Buy quality stocks, and even options, buy long-term options on quality stocks. All right, now let's jump in here and look at top stocks with a heavy short ratio. So what we'll do in the first segment here, we'll look at the stocks with a volume more than 1 million shares traded and relative strength index less than 50. That tells you these stocks have sold off along with the broader market. Altman Z-score more than 1.8 tells you these are strong stocks with a nice fundamentals and nice financials. And Piotrowski F-score more than 5, that tells you the books are good. We don't need to worry. These are not bankruptcy candidates. So with that, let's jump in here and look at top stocks with a heavy short ratio. Look, what we've done is we got here insider and institutional selling or buying. I like to look at the stocks with nice institutional support. And then we got gross margin and net margin, including the sales growth here. All these stocks have got nice sales growth, top line, gross margin and net margin. These are money making companies. Then also be a little bit careful about high high debt companies like CWH here. Camping World is a good stock, but look at the debt level here. They got very high debt level, and current ratio is okay, but debt level is too much here. They might have some issue with the interest rates. I've not looked at their interest rate, but it's a very high debt level in this market. And also pay attention to short ratio. We got here nice and high short ratio in many of these names, as you can see here. And finally, look at the float here. Many of these stocks have got low float. That tells you these stocks can go higher. There is not enough supply. That's why these can go higher. And we got earnings per share, PE, and price to sales ratio. By looking at price to sales ratio and even PE ratio, you can understand if the stocks are a little more richly valued. Look, few stocks are a little more richly valued. For example, you got Riot Blockchain. Even after this huge drop here, still it's relatively richly valued, but price to sales ratio is okay. It's not too much here. Then I would normally look at 1 day, 5 day, and see if there is a slight increase or positiveness in the market here. Look, if you look at Big 5 sporting goods here, RSI is 44, sold off, below 50 is sold off here, and it's making some progress in 1 day, 5 day, has got a nice overall score here. And you could take a look at stocks like this one here. It can go higher some more. Understand, stock has not done too much money for investors in past 5 years. And we got few more here with the nice and high score here. We got Dick's Sporting Goods. Stock has been selling off late, as you can see here. Nice overall score. Finally, it's trying to make some headway here. On Friday, it's up 3%. And this can also go higher. Look, high short ratio here. And the list goes on here, follow the same methodology, and we got a couple of them with nice and high overall score here. Look, ARCH, nice and high overall score, 97. Stock is making a move in 1 day, high short ratio, and look, it's got nice net margin here. Stocks like this you can buy and they will do well. Fundamentally good company. Look at their performance here, 6 month, 1 year, 5 year, doing great. Short-term weakness here, you could buy the stock like ARCH here. Then we got Riot Blockchain. Look, crypto is really coming down pretty hard. That's causing an issue to Riot Blockchain. This used to be high flying stock around $30-40. Now it's about $4.65. You could take advantage and buy some Riot Blockchain. Understand there could be some short-term pain here, but this can go higher. It's slowly going higher, as you can see here. The list continues, as you can see here. Keep a watch on high overall score here. We got a few more with nice and high overall score, as you can see here. All these stocks have got nice and high overall score, and there are also many of these stocks are going higher in the near term here. And you could look at these, and we got here WWE World Wrestling. I think they got some issue with the CEO. So CEO might be leaving the company. Stock is coming down, high short ratio. They got nice net margin. You could slowly take a look at this one here. It's down on Friday here. Wait for this to settle down, and then you could buy some WWE. You would do well. And we got one more right here, POWW. Look, it's got nice and high overall score, as well as KLIC, nice and high overall score. POWW looks like it wants to go higher in 1 day. It's done okay in 5 years. You could take a look at that one also. All right, so we got one more here, Himax, as you can see here. This stock has been stuck in the rut for a long time here, and look, nice and high overall score. Stock wants to go higher, but be careful with stocks like this one here. It's not had a nice time for a while, as you can see here. All right. Now let's look at stocks with the heavy short ratio. The reason I love stocks with a heavy short ratio is, as short sellers make a case and push the stock down, at some level insiders and institutions get interested and they will start pushing the stock higher. At this time, short sellers will try to bail, and that will keep causing the surge, and stock will go higher because if they want to buy more to cover their short. As they buy more, stock will even go higher. That's why it's a good game if you know what stocks to buy and when to buy them. All right, now let's jump in here and look at top stock with the heavy short ratio. So look, we got short ratio here. Look at the short ratio. We got very high short ratio in many of these stocks here. So if you're a conservative investor, keep a watch on the overall score. I like the one with at least over above 30 or 40 overall score. We got one right here, big five sporting goods with nice and high overall score. We talked about this. And I also like the stocks with a nice and high insider or institutional buy. Look, we got Carvana here. Carvana has a nice insider buy here. Stock has been going higher, as you can see here, in 1 day, 5 day. Even up here, RSI 37 tells it can even go higher, and it's got a low float, as you can see here. Not too much stock available, so this can go higher. I would say even now you could buy some Carvana. As you see here, Camping World, also there is slight interest. There is some uptick here with insider and institution buying. It's got pretty okay score here. High debt level, like we talked about. If you're a contrarian, you could pick up some stock in a Camping World here. And MicroStrategy is one of my favorite stock of late. To really buy put options and buy put spreads. Look, it's been down big time, but now it's trying to go higher, so you could participate in the short squeeze game here. It's got as you can see here, it's got a high short ratio. As you can see here, it's got positive, let's say negative net margin right now. Fundamentals are not great, but you could play some short squeeze game with this one, and if you're a contrarian. And we got few more here. Conservative investor, look for positive net margin. We got net margin right here. Few companies have got positive net margin. Look, we got Upstart right here. Upstart has got positive net margin, but overall score is low here. They have not made money for investors. You got to be careful with such names here. All right, now we got few more with nice and high insider buying here. Look at the HashiCorp here, software company, and it's got nice and high insider buying. Stock wants to go higher, so you could play short squeeze game in stocks like HCP here. And we got one more Fubo here. Fubo also has a nice and high insider buy here. Stock is responding here. If you're a contrarian, you could buy some of this Fubo TV here. It's got a low overall score, a low RSI, as you can see here. But long-term stock has not made money for investors. This could be a quick short squeeze type situation here. So don't hold the bag for a long time, but you can play some short squeeze game. It already went up 10%. It can go higher some more. All right, so list continues here. Follow same methodology here. Keep watch on insider and institutional buying here. We got few names, as you can see here. Shift for nice and high insider and institutional buy here. Stock is responding by going higher in 1 day. You could even buy this up here with the look, RSI still very low here and low float, as you can see here. And we got few more here. We got Warby Parker, eyeglass company, and same story, nice and high institutional buy here, and stock is responding in 1 day. It can still go higher, and look, RSI is 34, tells it's still low here. And keep a watch on 1 day, 5 day here. If stock is responding in 1 day, 5 day, if the RSI is still low, you could still buy them and go from there. Like Wayfair, one of my favorite stock here. Stock has been down big time here. Stock has not made money for investors. If you're a contrarian, you could buy this one here. It wants to go higher in 1 day. Trying to tell you, it might squeeze those short sellers. That's what's going on here. Follow same methodology. If you see some uptick in 1 day, 5 day, and RSI is low, you could buy them. And if you're a conservative, look for overall score above say 30 or 40. You could do okay here. All right, so list continues here. We got few more, and keep a watch on insider institution here. We got nice and high insider buy in some scenario here. Asana, we've been talking about this for a while. It's been going down big time, as you can see here, mainly because still it's got high price to sales ratio. But founder and CEO has been relentless. He has been buying his own stock for a while now. This could be for contrarians. Understand there'll be some pain in the short term here. Looks like stock is now trying to go higher in 1 day. You could buy some Asana here, but there could be some short term pain. And we got few more with nice institutional buy. EXPI, look, there is a nice institution buy here. Stock is responding by going higher. FTCI, same story here. Okay, institutional buy here. Stock is trying to go higher, as you can see here. And follow same methodology. Look at the overall score. Higher the better, and go from there. All right, so let's go further down here and look at few more. So the list continues. Keep a watch on insider and institution here. We got some nice ones. Stitch Fix looks like after the company got clobbered after the earnings, there's a nice insider buy here, and stock is not responding. You got to be careful here. If you're a quant trader, you could buy some Stitch Fix up here with a high short ratio. And we got few more with nice insider buy here. HYZN, nice institutional buy. Stock is slowly responding in one day, as you can see here. And we got KPTI, nice and high institutional buy. Probably it's compensated by insider selling, as you can see here. You got to be careful. Also watch 1 day, 5 day. If a stock is responding slowly, and you could buy such stock here, provided RSI is still below 50 here. Looks like many of these stocks have got RSI below 50. All right, so with that, in conclusion, market is very volatile. Be very selective when you select short squeeze stocks, and look for low RSI, insider or institutional buy, and stocks showing improvement in 1 day, 5 day, 10 day. Conservative traders look for positive net margin and also positive free cash flow and higher overall score. And few stocks to buy are, we got PECO, DKS, Coinbase, CAR, which is Avis Car, INMD, WSM, and LTHM. So with that, thank you very much. Happy investing and trading. Please subscribe.